All right, mate. So that is ACP. You said you're asking about ACX. Um, so you asked about ACX. You said it's down roughly 95% from its all-time highs. Now, um, so I assume, unless I'm looking at the wrong chart, I probably am, but you might be looking at that's 82% down. Yeah, okay. So I see what you're looking at here now on the calculated trading view, and you're saying it's down 95%. Yeah, very interesting. A lot of times these trading view charts, the wicks can't be trusted. So this wick might not be true and accurate. Now I'm not saying it's massively off or anything, but it's just sometimes you can get skewed wicks. But you definitely can see that there's two bodies up there. There's an open and a close up there. So at least you can definitely take it from there. Um, and that's still down 94, 95%. So yeah, you're dead right. From that first move, it wasn't listed on Tether then, so it's going to be very interesting here to see what's happening. So, I mean, it's not really good at this point. The only thing we can really look at is, you want to see this deviation and somewhere hold and start bouncing back up. It's tough to see where it goes from here. I mean, this is a bit of a failed bounce. Like you really wanted to see this hold above the moving averages, um, and be successful and allow these moving averages to what do you want to call it, flourish and form in the proper formation. A little bit like here, this is proper formation, and then you start breaking up through them. At this point, this is breaking down below these moving averages, and there's a 2-week chart, by the way, and these can get stuck above price, and price can kind of continue to drift. I'm not saying it's going to drift down to zero here, whatever I drew that to, but it becomes very hard for price to successfully get back above these moving averages, and especially after a bit of an M formation as well. I mean, the only thing going for it here is the fact that it's potentially forming this 3-month stop hunt. But overall, this is not a great pattern. Like, this is a breakup, and then this is a bearish, almost 3-month flag, if you want to call it that. Like a bear flag, you get a big drop, and then you create some sort of structure there, and it's breaking down now. A lot of times this can continue to go down. So for me, I think for stuff like this, I think it's probably best to trade a new 3-month candle, which is in 25 days time. You may not catch the low, but for some reason, if we were going to actually be bullish off this in reverse, there's going to be a green candle coming off it. Is there really need to knife catch here on a coin that does not look fantastic overall? I don't think so. I think you're best to protect yourself, sit on your money, and wait on a better opportunity.